Hey everyone, and welcome to Market Momentum. Today we're going to cut through all that noise to figure out what's really driving the markets, and more importantly, what it all means for you.
Okay, let's just dive right in. You see the headlines, right? Global tensions are definitely on the rise. But when you boil it all down, it really just comes down to one simple question. Is your portfolio actually ready for whatever comes next?
So, what was the spark this time around? Well, it was a single statement, a threat of 100% tariffs on China. And just like that, boom, a huge wave of uncertainty just washed over the entire market.
But here's the thing, and you know this. We've seen this movie before, haven't we? This kind of roller coaster, all driven by headlines and politics. It feels new, but it's a recurring theme. It's a pattern, not some unique world-ending crisis. And you know, that brings us to what I think is the most important part of this whole situation, the investor's gut check. When that news broke and the markets took a nosedive, how did you react?
This really brings to mind a classic from Warren Buffett. Stock investing is not for everyone. And the key thing to understand about this quote is that he's not talking about how smart you are or what information you have. He's talking about your temperament.
So let's do a quick little volatility test. And be honest with yourself here. When the market dipped, which one of these was you? Number 1, did you lose sleep, just filled with worry? Number 2, did you get angry, start looking for someone or something to blame? Or were you number 3? You felt concerned for sure, but you stayed calm and focused on your plan. And listen, don't just brush off your answer to that question. That emotional reaction, that's not just some passing feeling. It is the single most important indicator of your entire investment strategy. Knowing how you react when the pressure is on is worth more than any stock tip, believe me, because it tells you if you're even in the right game in the first place. All right, so now that we've got that crucial mindset piece locked in, let's get into the nitty-gritty, the hard numbers. We're going to start by decoding the major U.S. indices, taking a look at the S&P 500 and the Nasdaq. Okay, let's break this down nice and simple. For the S&P 500, the magic number we're all watching is 6660. If we see a solid, confirmed close above that line, that's a really strong signal, a potential green light to buy. Now, for the Nasdaq, we're keeping an eye on 24,800. We really want to see a clear break above its moving average. That's what would tell us the bullish strength is really back. So what's the big strategic takeaway for U.S. stocks right now? Look, the initial shock definitely caused a nice little rebound, but it is so important not to chase this thing impulsively. The smart money waits for that confirmed close above those key resistance levels we just talked about. Right now, patience isn't just a virtue, it's your best friend. Okay, let's shift gears a bit. We're going to move from stocks over to hard assets. Let's take a look at the strategy for gold and silver, and we're going to focus on a classic technical move that's playing out right now, when resistance turns into support. Now, this concept is so cool, and it's a fundamental part of trading. Resistance becomes support. Think of it like this. There's a ceiling. The price just can't seem to break. It bangs its head against it over and over. But when it finally smashes through, that old ceiling becomes the new floor. And what's happening in silver right now is a perfect textbook example. So, keeping that in mind, here's how the current strategy looks. For gold, man, that rally has really taken off. If you're already in, the recommendation is just to hold on. But it is definitely not a great spot to jump in fresh. For silver, though, it just broke that huge resistance at 50. So what do? You hold, because that old ceiling is now the new floor. It's acting as a strong support level, just like we discussed.
All right, now let's take that same disciplined approach and apply it to, well, the wild west of the markets, crypto. In this space, having a clear plan isn't just nice, it's the only thing that's going to prevent a total disaster.
This timeline is just fascinating. It's like watching the anatomy of the recent Bitcoin sell-off in slow motion, and it proves that a good system gives you plenty of warning. On Tuesday, a tool called the Super Trend Indicator flipped to sell. On Wednesday, the price tried to rally but got rejected right at the moving average, a huge warning sign. By Thursday morning, it broke key support, and then, just hours before the big crash, it broke the final support level. The clues were all there for anyone who was paying attention to their plan. And this is exactly why you need a plan before the panic starts. Here's what a potential framework might look like. For Bitcoin, a buy signal could be a break and hold above 11,330. If you're already holding, a 4-hour close below 11,340 is your signal to get out. For Ethereum, the safest entry is probably above 4388, with an exit if it closes below support at 4041. And for XRP, maybe look for a confirmed break above 2.63 to buy and a close below 2.49 to sell.
Now remember, these aren't predictions, right? They're just clear, unemotional rules of engagement.
Okay, now for what might just be the master key to this whole global puzzle. And it's something a lot of investors, even experienced ones, tend to forget about. The US dollar's next move.
And this chart right here shows you exactly why the dollar is such a big deal. The dollar index, or DXY, has this powerful relationship with almost everything else. It's like a seesaw. When the dollar goes up, it tends to be good for US stocks because it attracts money. But it makes things tough for gold and silver. And when the dollar falls, you usually see the opposite happen. Understanding this is key to seeing the whole board. So, what's the one number, the one level that could change everything right now? It's 99.46. A sustained move and a close above this specific level on the dollar index would be a huge deal. It would signal a major breakout and likely a period of dollar strength that would send ripples through every single market we've talked about today.
So, there you have it. We've looked at the patterns the market is showing us, from stocks to crypto. And most importantly, we did a gut check on our own investor mindset. With all of that on the table, the real question now isn't what the market is going to do next. It's what are you going to do?
Hey, thanks so much for joining us for this market breakdown. If you got some value out of this, a subscription and a like would be amazing. We really appreciate it.